For more on this tech sell-off, let's bring in T. Rowe Price Portfolio Manager Tony Wang. Tony, it's good to have you on a day like today where we have seen this incredible pickup. This whole month, actually, we've seen this incredible pickup in volatility, particularly in tech stocks and particularly in the NASDAQ. The fact that we had another 2% drop in the NASDAQ composite today was the fifth decline of 2% or more. This is according to CNBC's Robert Hum. This month, it's the highest number of 2% declines in a month since June of 2022, and we know how bad that month was. That was down almost 9%, looking back almost 3 years ago. Your take on what we're seeing in tech right now, whether it's a buying opportunity or whether you have to sit on your hands and wait for some sort of positive catalyst here?
Yeah, well, I think that, bull markets generally require conviction, and then bear markets require restraint. So I think that we're kind of in that the market is trying to figure out whether this is a buying opportunity. And I think if you take a longer time span look, like you see the growth and momentum factors have been really strong over the last couple of years. And so, we've had 2 really big years of tech. And so I think there is some type of digestion and debate here. And so I think if you look at valuations, they aren't at a place where you would say there's capitulation. I mean, stocks are still going down on bad news. And so I think that it's going to just take some time to work through. And numbers, when you look at them, haven't really been called down yet. And so I think a lot of the correction is perhaps a little bit of rotation, some valuation, and then just recognition. We've had, two really strong years. And, a lot of that has been the AI infrastructure build out and the multiplier effects it has throughout the market and the economy.
What do you think of these Joe Tsai comments about an AI spending bubble? And I ask that knowing that Bespoke this week also put out a really interesting chart showing how closely the release of ChatGPT versus the release of Netscape continues to track for the NASDAQ.
Yeah, well, I think that, it's natural for companies to question, how sustainable the spend is. At the same time, I think Alibaba is also spending record amounts of CapEx to buy compute. And so, I think that compute will always be valuable. I think that we are just debating where we are in the cycle. But I do think DeepSeek has a combination of, more nuanced impacts. I think on one hand, it reduces, kind of compute, in terms of inferencing, and optimizations. But on the other hand, it dramatically increases the market. And so you're seeing a lot of companies that didn't have the capital get in the market and start training and experimenting. And I think that, we will have these cycles, and long term, I think you always want technology to reduce its costs in order to be more attractive. So I think it's, I don't think it's one way or the other necessarily that it's clear. And I think the market is just, thinking about, a few cycles, the AI cycle and also the macro cycle as well.
What do you think of the CoreWeave IPO in this first day of trading? Is this a name that you would buy?
Yeah, I think that CoreWeave has done a few really impressive things. One, they have gone straight to the bare metal and have a very lightweight software that is more designed for AI. And so I think that's pretty impressive. They're able to drive performance. I think, they claim 20% better than the hyperscalers. And then number 2 is I think they've been able to pioneer this financing that's backed against the GPU. So I think that those 2 combination of things has allowed them to grow really quickly. I think that, the market here is just, debating on what is that value of the GPU clusters worth in years kind of 5 to 7. And I think CoreWeave's bet is that there is going to be a long run time for these GPUs, and they are willing to build it out. And, that's a significant asset there.